friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we look at what happened in the stock markets during the last week and how we can plan for a better trade for the coming week. It's March 28th, Monday, the week starting with that, 2022. That's what we are talking about. So, as usual, what we do is we would be looking at all these different parameters like price action, momentum, Bollinger Bands, support resistances, volatility, momentum, trend, all of these, and then jump into a conclusion, basically on how the week can be looked forward to, right? So let's look at the charts and see what they say. So the weekly charts is what you see here. It's a bearish chart, and also you can see it's weekly. It's a bull trap. Try to move above and then close below the previous candle, right? Previous candle's high, basically. And this is a bull trap on the weekly basis on the Banknifty also, that you see in the right side. The price moved up and then closed below the previous candle's high, right? So that's about the weekly chart. So it's a small pullback of two wide range bullish candles. So look at these two candles previous weeks. They're heavily bullish, and it is a very nice 10% of recovery that has happened in the last 2 weeks. And now market may be taking a little pause here, but that pause is little extra that you see in little worrisome that you see on the Banknifty, because it has formed a wide range weekly bearish candle. But look at the daily candles, right? So you can clearly see that there is a consolidation for the last 6 days. The last entire week nothing has happened, right? The price has moved in a very narrow range and then remaining there, moving up one day and coming down, then moving up, and then it's basically clearly consolidating on the shorter time frame. Banknifty, on the other case, it was consolidating for 5 days and for 4 days, and then suddenly it slipped out from the gap support that is here. In the Nifty also there is a gap support, but it is holding there and comfortably sitting on top of that. That's the price action on the daily and the weekly, the short term and the medium term that you can see. Let's get in the numbers and see what happens. So basically on a week to week basis, 0.75%, less than 1% is what we lost, 130 points to be precise. That's what the market is down from the previous week. Not much, It moved up and could not sustain and went into a selling process. So Nifty has done okay, it has just paused. But the thing is, it is resisting below the 20 weekly moving average, if you see, right? So you'll see that the charts on the last slide before you're winding up. So basically, it's resisting below the 20 weekly moving average, but it is holding that gap support that we are talking about the last 6 days continuously, daily basis. So this is a weekly rate top. So double top M pattern can still be seen on the higher time frames, and 5900 remains to be neckline of that, below which it may be breakdown that may be happening, right? So that's bird's eye view on Nifty. Banknifty, if you see it close even more red, right? While it was less than 1% down more that happened in Nifty, look at Banknifty near to 3%, 2.8. So that was the 1,000 points gone. So that pullback was a little extra, as I told earlier, right? Now the thing is, it is still holding the 20D. It is still, the 20 DMA is still holding that. We'll see that when we come down. But weekly basis, if you see, it is resisting below the 20 weekly average and the and the 50 weekly average also, right? So the thing is, it has given up. It has fallen down from the gap support, right? It has given the gap support, and it's double top M pattern is continuing to be there, and 30,500 is somewhere near to the neckline of that, right? And it is an attempted breakout. It is a breakout that may be happening right now from the trend line channel. So so the daily basis, if you see, you can see that the last candle is kind of resisting below the 50 DMA but above the 20 DMA, right? And the daily latest candle is also bearish, but it is below the 200 DMA. That's the thing. So 200 DMA on the daily basis is still not cleared, and it is taking the 20 DMA support. So 20 DMA is kind of intact and giving good support for both indices, but 200 DMA is not cleared on Banknifty, something you have to worry about, right? So what we talked about can clearly be seen in the last slide. Let me just quickly go there and see. Uh, this is the last slide. So this is what we are talking about, right? So the 20 to this 200 DMA, the 20 DMA, is still intact on both, and 200 DMA is very much intact on Nifty. But look at Bank Nifty, it is still to play the two. It attempted to do that and then fall down. When an attempt to close the 200 DMA is where it fall down, and that major gap is still there intact on Nifty, but Bank Nifty has given up. That is what we are talking about, right? Now let's go back to where we are talking about. So look at the Bollinger Bands, right? It's highly volatile. Look at the width of the bands from the median, right? So that is volatile, but sideways contraction has happened, which is skews is happening in Bank Nifty. So sideways volatile move is what we can expect. That's what Bollinger Bands are saying. But the price is far away from the median, so that means it's more on the bullish bias. Here it is taking the support of the region. So any fall below that would have clearly the Bank Nifty would have become so. But looks like very nicely it has been supporting for the last many days, including moving an average. So what you have to watch out is it falling down below the, or is it trying to move up and then Bollinger Bands expands or not. So as of now it is taking it is sideways consolidation with the bullish bias, and sideways consolidation with volatility is what Bollinger Bands are indicating as of now. Now support resistance levels, if you see, look at this gap, where it is consolidating the last many days. 17,000, 17,050 is the immediate support downside. Below that you have 16,800, 16,900, Fibonacci 38 support, and 16,700, 16,750, and below that 16,550 and 16,650. Then the support would be 16,350, 16,450, which is also a Fibonacci 50 retracement levels. And that is also having a good gap up support, gap that has become a support basically. Resistance on the upside immediate would be 17,200, 17,300. 17,200, 300 with the first resistance. Above that 17,350 to 17,400. Then above that 17,500 to 17,600. Fibonacci 23 retracement level is a major Fibonacci 23. And only if this downswing, if you are looking, it is Fibonacci 61. So clearing this 15,500 is very crucial. Right? Above that you have 17,800 to 17,850. That's in Nifty. And the Bank Nifty support resistance levels, if you see right now, you have the resistance at 35,600 to 35,900, near to 36,000 level. And above that 36,000 and 36,800 Fibonacci 38 retracement level would be the major resistance. And above that 36,900, 37,100, that range. And then that's resistance. And 37,300, 37,500 is crucial. It's a Fibonacci 23. And also the gap that is there, the gap resistance that is still uncleared, and where it has hit multiple times here, this is going to be a major zone. So clearing the 37,500 and closing above that would, just like 17,500, how it is crucial for the Nifty, 37,500 clearing above this gap is very crucial for the Nifty. Downside, if you see, the supports can be seen at 35,000 nearby levels, which is a Fibonacci 50 retracement level also. Then support 34,350 to 34,750 is next support, and below that 33,600, 34,100 Fibonacci 61 retracement level is also a support. There is also a gap that is formed that is going to be a very good support area. 34,000 is going to be very support area, right? So that's the support resistance levels on the Bank Nifty. Now coming to the momentum, Nifty is having a sideways momentum, and it is resisting below the 20 moving average, right? 60 moving average, 60 RSI momentum. So it is moving down and it is facing the resistance there, right? So it's a sideways momentum, and on the daily short-term charts and the medium term also, it's momentum is sideways. Bank Nifty is also having sideways momentum, and it is resisting below the right side. You can see it is also resisting below the RSI, right? And short-term and medium both sides. So overall momentum is clearly sideways. No divergence is the same, right? And ADX indicator, if you see, you can see that the Nifty continue to maintain the momentum on the DMI positive level, while Bank Nifty has given it up and crossed over to bearish DMI negative zones. On the medium term, both Nifty and the Bank Nifty are having bearish DMI negative zones. So trend does not improve much, except that Bank Nifty somehow is holding the trend intact on the DMI positive levels, right? Now coming to the volatility and opportunity analysis, the VIX has cooled off a little bit, 3.5, and VIX has come to 23.5 levels, right? But still is above 20, and so with some cool off has happened even when the market corrected. That means that cool off, the correction may Probably it means if the price is moving down and the price is moving down at the same time VIX is also moving down, means there's something something that is unusual, and probably that down move may not sustain and may pull back, and is what it might indicate. Exactly how the VIX may be indicating that the volatility is cooling off. Right, price is likely to move up probably. Right, so that's about the next. So, but you have to be cautious because the uncertainty is still there in the market. It's about the 2023 is still a high range compared to few months back when we are hovering in the 15 to 20 range. That's the ideal range that we need to be. Right. So, upper interest on the Nifty is showing that it's long unwinding, and Banknifty also showing it is long unwinding. Long unwinding on the futures upper interest data is what we are talking about. So, long unwinding would mean that people who are long are unwinding the positions and going to short. That is kind of directions basically. And the operator's data will be seen in the next slide for March 31st monthly expiry. So monthly expiry is a very crucial, it will be highly volatile, right? It will give us a true range, on a medium term. Now put call ratio is 0.81 and 0.65 on Nifty and the Bank Nifty, which is not bullish enough, right? It's slightly, less bullish on Bank Nifty. You can see that's what PCR is saying. Look at the levels, So you can see that a lot of additional call writing has got added up here, a lot of additional call writing, change in operators, has happened here. So levels, if you see, this is 2000 points range of 16,000 and 18,000. So call traders and put traders does not have any clue where the market is going to head to. So that's why they have written highest put at 16,000. It's 2,000 points away. Means right now, it is 1,200 points away from where it is right now. So the range, such a wide range. So that is clearly the option traders do not have much clue. It's a positions to arrive at that wide range. The second level of support and resistances can be seen at 16,500 and 18,500. Right? Look at the levels. Look at the range of 2,000 points wide, which does not happen that often, right? So that's for the March 31st, 2022 options open interest data that we're talking about, right? Put call ratio and futures open interest data we already seen. Bank Nifty levels look at that 34,000 and 37,000. So 3,000 points is for the moment that is expected. The highest put writing is seen at 34,000 and 37,000 seems to be the major resistance that the call writing is seen. 35,000 and 36,000 the second level of put and call writings that has happened in the market as of for the March 31st monthly expiry. Now look at the sectorial watch. So the IT sector has moved up 1.5% and it is formed a bullish weekly candle, right? The short term is sideways, so it's near a very all-time high. You can see that, right? It is very close to an all-time high. So whenever it is near, and last time it has made the all-time high and then immediately it had fallen back heavily. So on a weekly basis, the weekly charts that you're seeing. So IT sector is very close to the. It is rising up. Definitely, it's bullish. Momentum is heading towards bullish. On the medium term, it is almost bullish, you can say, but you have to be cautious because it's near the all-time high. Now look at the metal. The metal actually broke out, right? So the sector that is the star of the week is metal, which is broken out from a major multiple month resistance on where it was consolidating for almost 10 months, I believe, right? So it has been hovering around this region, and then now it has clearly broken out with the opportunity low. The price pattern is bullish price pattern, and clear bullishness can be seen, and the momentum is on the medium term as well as the short term it is bullish. So stock picks can be done on the sector is what markets, but it has to be with tight stop losses and cautious approach because market is volatile and still struggling back to recover from the lows, right? So the auto sector is red 2% down from the bearish candle, right? You can see the auto on the top here. It's a bearish candle. It was a good bounce up, so it is behaving just like the market is behaving. 2 weeks of up move and then a downward. Remember that it's got major resistance in the upside multiple. Its momentum is still sideways, right? And the pharma sector actually flat. That you can see that it attempted to move up, 0.5% up, and a big up move happened from the bottom, and it is at a major resistance zone. Any move above that will make it bullish, right? As of now, it's sideways momentum. Now FMCG also is kind of it went down yesterday. FMCG is 3.5%. So the two sectors that went really down was auto 2% down and FMCG 3.5%. So pharma and reality was basically flat. Reality is actually bullish. It's forming a cup and handle on the high time frame, and is well within a channel. And it has bounced up from the a small flatness can be seen, but sideways momentum. Before it breaks out, the momentum will come to the bullish zone. So that's the time when we have to make the entries, right? As of now, it's all sideways. The only sector that is performing is IT and metal is super bullish. IT near all-time highs. Now, index heavyweights, SDFC Bank, if you see, it's a wide range of bearish candle that happened. Momentum has slipped down and then sideways. HDFC also is formed a bearish wide range candle, and it is resisting at a major resistance zone, which is a previous support, right? So just attempting to break out from that, it could not sustain any more, and let us wait and watch whether it manages to clear this resistance zone or not. Now look at Reliance. That is the star heavyweight of the week, right? And it is clearly broken out, and that's nearly 20% of up move that has happened from just 3 candles, 3 weeks. Right? The volumes are slightly falling from the top. If you see, from 2020 for the last 2 years, the volumes has been dropping, but it is above the moving average, and it seems to be a good break out of the weekly cup and handle pattern. That's it. So Reliance is a star. HDFC twins heavyweights not performing, and major selling pressure is seen, sideways momentum. But Reliance has got into the bullish zones on the medium term also, and a kind of breakout from the handle of the cup and handle has happened, right? Other heavyweights, if you see, Infosys also, it is performing, and Infosys freaking out, but keep in mind that it is also at a near all-time high. TCS also has moved up with sideways momentum, but Infosys is just got in the bullish zones. TCS is still the sideways, and it has resistance upside, but long way to go before it can reach the top of the channel, where it is clearly maintaining the channel. Look at the ICICI Bank. It is facing resistance clearly at the previous support zone. It decided and bounced up or broken out. Now it is. So this is a change in polarity on the downside that could be happening. If it cannot sustain from here, it could give a very big down move, right? So the previous support is acting as resistance, and then from there that breaks downside. So there is a possibility. Change in polarity is a possibility. It's not confirmed. Could happen. The momentum is otherwise sideways, but ICICI banks has a major resistance. Even the bearishness, you can see that banks, HDFC Bank, ICICI Bank, Kodak, all the major heavyweights are showing bearishness. Kodak also has come down finally back to the major support zone from where it was bouncing with 2 weeks. So 2 weeks of gain simply wiped out in just 1 day. So it has come to the support of the RSI momentum, so it's sideways. So hopefully it will bounce up and maintain this support. This support is very strong for the Kodak Bank right now, so it's not likely to break down from here. Mostly it may consolidate and move around the zones or try to bounce up, right? So banks are not doing good. All the 3 banks in the heavyweights are not doing. IT is performing good, and then Reliance is good, and HDFC are bad and not performing. It's bearish. That's about the index heavyweights, and then moving on to the institutional participation. If you see, just ignore what is written here. Just ignore what is written here. Look at only the charts, right? Let's ignore, right? So I don't have a count of how much of if I selling is. You can see that overall domestic institutions have purchased more than. That's all I can immediately say. So right, you can see that the last 5 days, there is some 3,500 or 3,000 crores of buying has happened from the domestic institutions, and this is a mistake. Please ignore what is written there on the top. And Fyers surprisingly had bought some 1,000 crores but sold 2,500 crores. So it is kind of a balancing act that happened in the last 5 days in the Nifty. So it is again the selling trend. Fyers have sold more than what the domestic institutions have purchased, right? So if you see the selling, it is 3,000, 4,000, 5,000, 6,500 crores. So 6,000 crores of selling has happened, and the buying has happened only 3,500, 3,000 crores. So 3,000 crores, additional selling has happened with the Fyers last week. So you can clearly see that the Fyers charts on the top and the FDI charts on the down. So they were buying very little quantity on 2 days in the mid of the week, but otherwise big selling, right? And DIs, if you see that they did not support as much last week, and they went into 2 days of selling also when the Fyers were buying, right? So that is the reason why market has fallen down. So retail support is not present much. Much in the market last week, and the markets had fallen down, right? So sorry about that numbers that is written there here. Ignore that. So it is coming to 6,000 crores and of selling, and and probably 2000 crores of buying from DI is what the summary is all about for the last week. So coming back to the global markets, the US markets, you can see that it is a good bounce up week that happened, and it is a continuation, but not that great continuation, but it moves and closed above green. Momentum is picking up pricing, but it's still in the sideways. Trend is still not reversed on the medium basis, medium charts. That's about the Dow Jones, and then going to the Nasdaq, you can see that is also showing a big bounce up from the support zone, reclaiming the support zones, and also in the S&P 500 also you can see that bounce, and then the momentum is rising up, but still not in the bullish zone. So momentum is still not yet in the bullish zones, but a very good recovery continues this week also. The US markets have done well last week, right? Now the dollar index, if you see downside, you can see that it has moved up, spiked up 0.5%. So you're coming back to the US market. So 1 to 2% of rise is what you see last week. And the dollar is 0.5% rising up. That means 98.81. So remember the 99.6. Another major resistance, which seems like it may be breaking very soon. And above that, it has 1 or 3 levels of resistance. Right? So that's the US dollar index, and the USDINR is kind of moved up. You can see that. It is hit the 77 plus all-time high levels, and then it has cooled off because some central bank intervention, and then it is hovering around the channel top area, and is in no mode to come down. So rupee is weakening, and then continue to be weakening, and last week also it weakened. 76.25 is where it is right now, after cooling off a little bit from the 70 all-time high levels of 77 plus all-time high. Now crude oil has had earlier cooled off a little bit, but look at what is happening. So 27% of cool off has been nullified this week, and it seems to be a bullish candle that has formed again for the last week. It seems like it is heading towards 13-year high, and right now it is at 111.65 kind of levels is where the crude is. Right, the momentum is having a divergence also, and that is absolutely worked out. And so, and everything is bullish, and the price is likely to definitely hit the 13-year high once again. Look at what is happening in the gold. The gold had taken this up, had basically attempted a good breakout 2 weeks before, and then it closed, faced the selling pressure just inches away from the 2074.2, the all-time high levels, and then it fall down, and then seems like it seemed that it was a false breakout, but the cup and handle breakout that happened. It did not further fall down from the support zone, and it has taken a support and consolidating. And last week you saw that it is a spike up of how much? 2% of spike up happened last week. So gold is not giving up. It's as we mentioned, it may be consolidating around this major support zone, and then maybe it may finally break out at some point. Remember that there is a bullish divergence, reverse divergence, that you can see clearly on the gold. So gold is now likely to hit the all-time high once again, is what the charts are indicating on the medium term. Right. Now, two picks. Delta Corp is having a rectangular pattern breakout. Look at the volumes, mega good volumes. Momentum has spiked in the medium term. Trend has changed, crossed over to the bullish zones and rising up. So overall, the Delta Corp is a good pick. And then JSW Steel, the metal sector, is breaking out, and it is a flag and ball breakout that may be happening. Clear bullishness on the weekly basis. Volumes are above the moving average and almost approaching bullish zones on the weekly momentum, and then trend is also about to cross over. So SWC and Delta Corp swing trades for the next week. This is the payoff charts of the option strategy on Nifty, the double calendar spread. The reason why this double calendar spread has been a favorite of mine is because it gives a very good range. No other strategies can give this kind of a range with this kind of estimated premium. Right? And look at the probability also is fair enough. 80% probability and a range of 1,000 points, 16,600 to 17,700 is the kind of range that we are getting. Right? All you have to do is sell as for the monthly expiry at your levels where you think it may not breach. That is 17,600 call and 16,650 put. That is a very good range that is not likely to breach on the both sides, right? Put side and call side, and then take positions which are cheaper, right? All the next, the upcoming, right? So the Vega positive strategy, you can benefit overall, and then increase your increase your lot sizes depending on the capital size allocation or position sizing that you have. Right? Very good advantage for risk to find the strategy. So you know exactly what you're going to lose, and this can be adjusted also well. If you somehow see that there is a 200 plus move that is happening on the left side, then roll up down from the right side, that means roll down the put, and then otherwise doing the opposite of that by rolling up the put sides. And so if the market, so opposite side of where the market is moving, roll up and roll down the put, this sold positions is what you have to do. And probably you don't need to change the hedge positions, that remains hedge positions. But again, it's a very wide range, very less likely, unless there is a big black swan event that happens. It's less likely that it can wipe out your capital. It can definitely have you risk defined and a non-loss that you can afford to, right, as per your position size. So these are strategies that you can benefit from. So it has cooled up a little bit, so there's also a chance that volatility can rise up now, in case market is falling down. So you can benefit from that also, right? Does not mean that it will only work on a weeks up. Right? This can give you a very good range and very good probability of profit also. So that's a Nifty double diagonal current spread strategy that you can see here. And before we wind up, just the charts on Nifty and the Bank Nifty, that's once again put here. Right, you can see that the 200 DMA is clearly down here, far away from Nifty, has a good support, and Nifty is for the last many days comfortably sitting on the support of the gap, and then the hurdle before Nifty is Fibonacci 61 retracement of the last swing low. That's what Nifty is. Bank Nifty, meanwhile, is still dealing with the 200 DMA, and it hit the DMA and then fall down. It has given up the major support here, and then it also has a hurdle of Fibonacci 61, as well as there is a gap resistance at some upside, which is not the case for Nifty. So Bank Nifty, it all depends on how the bank is going to perform the next week, where the market is going to move up, right? So this is a wrap up. Most of these items is a continuation of what we have been talking about last week or the week before that also, right? So overall the market has recovered 11% from the last two or 3 weeks, including this week. It's 3 weeks. 11% of recovery happened from bottom, which is a good thing. And bullish wide range candles were formed previous week. That's all what happened earlier 2 weeks. Bullish wide range candle is not there now. It has taken a pause. Bearish wide range is what you see in the Nifty. So, and you can see also that there is a downtrending channel that was formed, and then it seems to doing a breakout from that, attempting a breakout from the channel, and attempting on the edge, attempting to break out from that is what is happening. So overall, that's what last week what market was using. Now the price is saying that it is facing resistance to further move up. It is indecisive. It is sitting on the bench. Volatility has cooled off, but the momentum is still saying sideways. Bollinger Bands is saying consolidation, right? Immediate lower price action. So yeah, so breakout into some. So overall, it is a mild bearish or neutral view is what I have for the next week. The US charts, Fed high showing good. US after the Fed back 2 weeks back, now just showing that it is a good recovery that has happened. Continue to be above the major support zone, which is also kind of giving hope that our market also would remain positive as long as the market is not going down. But US inflation, Fed interest rate hike, and US Russia Ukraine crisis, NATO interventions, all these war and peace and talks is all uncertainty, and bearish sudden moves out of the fear. Uncertainty can happen anytime. Rising crude is another worry. Rupee weakening is even more trouble for our markets to positively move. That is why the market is hovering around, taking on a pause instead of breaking out, just like how it used to do several months before. That's not the case now. That's the positive factor, is that despite the belief of the confidence of the retailers are still there, is very much evident that multiple times it had to go down, and still buyers are ready there to buy and more. The market 10-20% just after 1 or 2 weeks, right? So India weeks is cooled off, but still it is about 20, so we have to be cautious. Market uncertainty is still there in the market until it comes to the 15 kind of levels, below 20 at least. Right, so the fact is that Bank Nifty still has not cleared the 200 DMA, and medium-term price action, right? Medium-term price action remain a threat. The price action, if you see, you can see that until 18350 is cleared, you never know whether on the medium term the market is going to move up or not, right? And the short term 17500 is what you have to look at, right? And Fibonacci 61 also is a major area that is coinciding with 7500. Downsides 930,000 levels has to be close watch for Nifty and Banknifty, right? So overnight positions always use the vertical spreads and horizontal spreads, because it can save you from your capital getting wiped out and continue to be in the game, right? So otherwise stay away from wicks until the wicks cools off and high volatility is still there and uncertainty is still there, or mild bearish is what I am seeing. In neutral sideways consolidation what I look for the next week also, right? So that's my view, and in case you find it useful to frame your own view for the market and the trade plan for the next week, consider hitting the like button and share to maximum. So your support and subscriptions, comments, feedbacks and all these are very valuable for us, keeps us motivated, and we have very few subscriptions, so look forward for your help in this regard. Thanks a lot. Happy trading, happy learning. Bye. Thanks.